We are live. Hey, everybody. I am Haley Gray, and I hope that you are having an amazing afternoon today. And you'll notice that I have a slightly different guest with me today. This is Joe DiChiara, and he is a CPA in New York. And guess what, guys? It is February, and it is tax time, and we are rolling into tax season. So we thought that we would bring you some financial planning and tax planning and all of those kind of fun things, and a free challenge around, building your business, with an eye to the financial side of things. So we've been talking a lot about list building and public speaking, and y'all know me, I like to take a very holistic approach to business. So we're going to be talking about the financial piece, which honestly is probably not my strong suit. I survived financial and managerial accounting and finance and all that stuff at Duke, but God love it. I am so glad that is not my job. So welcome, Joe.
Yes, it's my job, right?
It is absolutely your job. So tell me a little bit about who it is that you work with.
Well, I work with the smallest of small businesses. In fact, I work with businesses that aren't even businesses yet. In other words, people that might just have an idea that they want to start a business, or they've been, they're ready to start a business. And I work with them all the way through, from the idea of the business all the way through, preparing your tax return and everything in between, which includes, what you do, your marketing, the processes that go into running a business. It's not just about the taxes, it's about all the stuff that goes on before you file your taxes.
Right.
So
absolutely. Well,
yeah.
And I would say that by the time you get to doing your taxes, I would say 90% of it's really over and done, because you're just doing data entry at that point.
Well, actually, the way I look at it, Haley, is that by the time it's time to actually file your return, they should have been done a long time ago. All your numbers should have been crunched.
Right.
My clients, all of my business clients, all their returns are done already. I'm finished with them because on January 15th, I closed their books.
Right.
And I just had to wait for the government to start accepting the tax returns. That's the way it's supposed to be. Business is fluid. It doesn't just start and stop.
No, it doesn't.
And what I try to teach my clients and the public in general is that, a tax return is an administrative task.
Mm-hmm.
You are reporting to the government what you did the year before.
Mm-hmm.
Okay, it's to nobody's benefit except for the government. So,
no, I get it.
So what happens is people get all this fear and anxiety at this time of the year.
Right.
Okay, and poor accountants like me have to take all that fear and anxiety on.
Right.
So no, the point is it's just needless stress except for the government. I'm hearing feedback now, but
yeah, I got it. Got it taken care
of. The point is, what I'm trying to teach people, especially solopreneurs, is that you're suffering needlessly. Pain is inevitable. If you're in business, right. We've talked about this, but suffering is the stuff we put ourselves through needlessly, because there is a better way to do this.
Yeah.
And we're going to be talking about that in the 5-day challenge, about how do you actually structure your business so that it's on autopilot, so that you could focus on the things that bring in money and not worried about filing a tax return.
Right, exactly. Now, what are some things that people should be doing now, because it's February 3rd, to be getting their stuff ready to go to filing, that that is pretty universal across, regardless of size or anything else?
Right. So besides the fact that, so if you're my existing client, you're already done. We've, except for, the odds and ends that come in from the insurance companies and the 1099s that come in late, or the stock transactions, that's the only stuff that really delays us.
Right.
So if you have a business and you're on top of it, especially if it's a small business, there's no reason why you should be like looking at all your bank and credit card statements to try to, come up with your numbers. But
right.
That being said, that's what most people get themselves into. So
Absolutely.
the solution is, the long-term solution is that you get your books in order, you get, any, and any really successful entrepreneur is on top of their business. They know their numbers.
Mm-hmm.
So if you don't really know your numbers, and that doesn't mean you got to know how to do bookkeeping or anything, but you got to be able to look at a balance sheet and a P&L and say, okay, something's off, or we're not up to date. Okay. That's the objective, to get on top of it. But that being said, because a lot of people aren't in that position yet, and now it's February 3rd and people are starting to panic. Okay. So we don't want to panic. That's the first thing, because when people start panicking, they rush, they forget things. And I'll give you a couple of recent examples, because so I finished a couple of clients' tax returns, and one of them forgot that they had started rental property. She totally forgot that they, brought in money from a rental property. I mean, it's, so we did her return. Now we got to amend it. And the thing was, she knew this in the beginning of the year. She didn't think to tell me, and she's a business client. Mm-hmm. So, now we got to rush to fix her return. Another client got a retirement distribution. She forgot about it. Another.
How do you forget about a retirement distribution?
Well, because people aren't really paying attention to their finances, Haley. That's the real problem. So for the people, and this is, a couple of things that I wanted to bring out here. Part of it was on me. Maybe I should have waited a little while for the stuff to come in. But this was, out of the ordinary with these two clients.
Right. So we have a question, Joe.
Yeah.
And you need to make sure that your browser windows are muted, so that we don't have any feedback coming in. Or maybe it'll just stop because Facebook is being great that way. Beth Meyer asks, do you suggest that your clients with home-based businesses set up an LLC?
No. We don't do LLCs for operating entities, because
okay, so what do you do instead?
You do an S Corp. 98% of the time you want to be an S Corp, because when you're an LLC, you're still considered a sole proprietor for tax purposes. Mm-hmm. And you don't want to be, what you're doing is you're telling the IRS that you're commingling your business and your personal. And then you got a red flag on you. I mean, there's a couple of other reasons, and if you stay tuned, we'll get into that on another segment.
Right. So we'll talk about business entity setup, here, but that definitely you should do an S Corp, Beth.
So what I really wanted to bring out today, because I know we don't have a lot of time, is the rush factor is bad. Do not rush. You can always put out an extension instead of rushing. Okay, because my experience is when people rush, they forget things, they make mistakes, and then you got to fix it later on. And it's harder to fix something than it is to get it right the first time.
Right.
So, but the thing I really wanted to talk about today, Haley.
Hey, we've got some more questions going.
Oh, okay. Yeah.
So do you suggest that your clients with home-based businesses deduct a portion of their home.
Absolutely. And that's another reason why you got to be an S corp.
Right.
Because when you're a sole proprietor, there's a special form that gets attached to your personal income tax return that says, hey, look at me, I'm using my personal residence as a business. That's the legal way to, I mean, you got to follow the law. With an
Right.
S corp, it's a totally different accounting system. You
Right.
have what you reimburse yourself for the business portion of the house, and there is no special form on an S corp. It's totally legal. It's just the way that they set up the rules. Okay.
Right.
They make it easier for corporations to do business.
Right. Now,
So
how does one set up an S corp?
Well, first of all, how does one not set up an S corp? Is you don't go online to one of those companies because they nickel and dime you. A lot of times they set you up with the wrong type of entity. I've seen them set up people in Delaware when they shouldn't have been, and so you don't do that. I actually have a do-it-yourself S corp kit for $47, where I've had people actually, and it's not rocket science, and I'm talking about just a simple single owner entity.
Right.
Okay, it's really simple. It's a couple of forms you fill out online. You got to do some research. I support you 30 days. And that's a way for people to just get incorporated that don't want to, spend the money. I also incorporate people myself. It's more than $47, but that's a whole nother package. But
Right.
other than that.
And I'll post the link here for the S corp stuff.
Yeah, or they could just go to Time with Joe and book a free chat with me, and I'm happy to talk to anybody about any of these subjects.
Okay. So, so the person, Beth says that the accountant that she's working with, which was previously with the IRS, said an LLC is more advantageous with somebody partnered with a network marketing company.
Nah. Why would that be? Because when you're with a network marketing company, you're still considered a sole proprietor for tax purposes. When you're an LLC, you get legal protection, but there's no tax benefits at all. And there's a lot of accountants out there that don't understand this for some reason. Okay, LLC is a legal structure. LLCs were created for passive activities like oil wells and real estate. LLCs are not meant for operating entities, okay? An LLC has other purposes that don't apply to a very small business, a solopreneur. It just doesn't apply to them. I'm sorry.
Yeah, no, I get it. So I posted the link here for timewithjoe.com and the S Corp's options.
But these are all good questions, I just see a lot of mistakes being made just on, the LLC issue. Forget, most people just stay as sole proprietors because it's so confusing.
Right, and Beth was saying to save on self-employment tax.
Yeah, so with an LLC, you don't save on self-employment tax because it's all, your net profit is subject to self-employment tax. S corps, when you have a net profit, it's not subject to self-employment tax. Now, some people will say, oh, but you got to take a salary. Yeah, you got to take a salary, but you don't have to take all of your profits as a salary. And that's where you get a lot of the tax benefits.
Right. So essentially, when you have an S corp, you have managed to completely separate yourself from your business entity. So you're drawing a salary. So, you may draw some small amount, $100 a month or something, or $200 a month. As long as you're doing something, then you can keep the profits into the S corp. and manage it that way.
Right. You have more flexibility of your tax situation. And that's what we want. We want control over our finances. And with the IRS hovering over us all the time, okay, it makes it almost impossible to run a business effectively.
Mm-hmm.
When you're an S Corp, okay, and this is based on me working, seeing tens of thousands of tax returns being processed, okay? I've seen 3 S Corps been audited. I've seen hundreds of sole proprietors get audited. Now, these are audits that I worked on myself, but that's the norm. Sole proprietors get audited and S Corps don't. And there's a lot of good reasons why.
Mm-hmm.
Okay. The IRS doesn't want to be bothered with a small business corporation. Okay. They don't have the time or the resources to police those types of entities. And those types of entities usually have a good set of books and records.
Right. Well, and Diana Anderson says, and the IRS is getting to watch us all more closely.
Yeah, and if I could just take a few seconds to talk about that, because this is what I'm seeing just the first couple of weeks of tax season. And, you know, this is what's been coming for a long time, Haley. I saw this,
right?
You know, the internet started and all the sharing of data. So where we are now is really at a point where me as an accountant, I have to ask my clients for so much documentation.
Mm-hmm.
And that adds to how much time I got to spend processing a tax return,
right?
Which adds to the cost. And it's also in New York State, I'll give you an example. I have to have the front and the back of the driver's license because I need the front of the driver's license number. And now there's a special code on the back of it in New York. That's only in New York State. Okay. The IRS now is sending pins, personal pins for a lot of taxpayers that either requested them or had some kind of identity theft. So now think about this. If the client forgets that he got a PIN, because there's no way of me knowing it, if they forget, I file the return, it gets rejected. Now we got to jump through hoops to figure out what the PIN is.
Mm-hmm.
The point is, oh, here's another thing. So I changed my EFIN because my EFIN allows me to file returns electronically. So I switched offices, so I got a new EFIN. That set off all red flags throughout the whole system.
Right.
I had to be on the, and it was all because they said, oh, we just got to check your identity. Check my identity. I'm a CPA, I've been doing business with the IRS for how long?
Right.
You know, 4 hours on the phone with the IRS, which is normal.
Right.
To do this, to reset my EFIN. And now I'm getting rejected by the state of California, basically for the same reason. And the funny thing is, I call my software provider. They send me to California. California's telling me to go back to them. So this is on my end, Haley. I'm just the intermediary. So when people are getting their tax, and this is the point that I wanted to make in the beginning. Getting ready to do your taxes and you're panicking. Okay, just slow down because you got to get a lot more information together now to do your return than ever before.
Mm-hmm.
Okay, if somebody is trying to claim a child, just to claim a child care credit, I'm supposed to ask them for all kinds of documentation. School records, doctor's notes. I mean, it's ridiculous. Now, forget about if they want to get the earned income credit.
Right.
It's like they've made us, the accountants, their unpaid police, and we have no choice but to ask people for this information, and it holds up everything. It holds up everything, and it's really crazy how difficult things have become just to run a business.
Right.
It's we got to make things simpler, Haley.
We do.
Make things easier.
And Diana Anderson says that's why we all need a tax advocate versus do it yourself.
Guess what? We do have a tax advocate. There's an office of the tax advocate, or whatever they call it.
Mm-hmm.
Good luck trying to get help from them.
Well, that's why you need a CPA versus trying to do it yourself.
You need somebody that's going to go to war for you with the IRS. Okay? And I've been at war with them for 30 years. And I'm not saying you gotta work with me. I can only handle so many people, and there's a lot of people out there that are getting. It's not good for business. It's not good when you're running a small business and you get caught up in this compliance minutia stuff. Okay,
right.
It's hard enough to run a business. If I told you what you have to do just to set up a hot dog stand in New York City, you would look at me cross-eyed. I mean, it's unbelievable what we got to do now. They're holding everybody accountable, but they're holding the wrong people accountable, I think. I don't know. But I'm just putting it out there, what you can expect. It's not a simple process anymore. You need a professional. I just got my cousin finally. She didn't want to ask me to do her tax return for all these years. Well, finally she said, "Can you look at it?" Well, she cost herself $2,500 last year, which I can get back for her, but she made a mistake. It was a simple mistake. It was a little box that she was supposed to check off. She didn't know. And there's probably a lot more people out there like that. So, part of the thing is that, there's a perception out there that accountants are too expensive, I think, or an enrolled agent or somebody that's a tax specialist. But that's what people need now. If you're running a business, you really need somebody to help guide you, and not anybody. I'm talking about somebody that's actually not worked for the IRS, somebody that's worked with the IRS. Because I never considered me fighting against them, okay, unless I got some kind of rogue auditor or something. But they have a job to do, and they want all the pieces in place, and that's what somebody like I do. I put the pieces in place in the order they want to see them, that there's no red flag.
Yep. I agree. And I think that there is definitely, understanding what hoops you have to jump through, how you have to jump through those hoops, and just being aware of it is so important. And, just like Beth Meyer says, it's just part of the cost of doing business.
Yeah, but it's become too big a part. And there's too big a gap between the solopreneurs and the bigger businesses. I never thought I'd be talking about something like this. But, the truth is that S Corps were created to fill the gap between the very small business and the corporations. And you want to know something? It didn't work. Okay, it didn't work because we still got 25 million sole proprietors out there that are still they're going unprotected, they're overtaxed, they're over audited, and that contributes to them failing.
Right, yeah. Well, and an audit can be just really dangerous. And Beth says, if anyone thinks an accountant is expensive, it's their money mindset that needs some work. A good accountant is needed when you're in business. It costs way more to not have an accountant. Can I just get an amen for that one? Seriously, because I've seen a lot of things where you can TurboTax yourself to death, but you're not going to get the right deductions. You're not going to get the deductions in the right amounts. You're not going to do a lot of things right. And a good, experienced CPA, registered agent, et cetera, is really going to help you take care of these things without spending way more money than you need to. Absolutely.
It's like that you remember that commercial, Haley? It said you could pay me now or pay me later.
Yeah. Mm-hmm.
I've made a good amount of money fixing people's tax problems, and most of them were avoidable.
Yeah. So most of the tax problems are avoidable, That's huge.
Yeah, it's like insurance. You don't need it until you need it.
Right.
You're
Yeah.
paying it, but
I get it. So we are doing a free challenge starting on the 17th. Diana Anderson says, using TurboTax is a great way to ask to be audited. Unfortunately, if you're a small business owner, Joe can confirm or deny this, but I believe that to be the case.
okay, when they get a return that says self-prepared, you go into the potential audit file. Okay, you go into the bin that, it's like you're on a conveyor belt. And when they see CPA, enrolled agent, a professional, you go this way. When they see self-prepared, you go into, okay, next step, let's see if we want to audit these people. And that's the truth.
Mm-hmm. Yeah. And I think that there are just certain things you do or don't do that increase your risk of being audited. And CPA or TurboTax, that decision definitely increases your chances of being audited.
I think the IRS loves TurboTax. They love it.
Yeah, but not in the way that you think they love it.
It brings in revenue for them.
Absolutely. Yeah, unfortunately. So tell us about this 5-day challenge that you are doing starting on the 17th, because I think that that's going to be an amazing opportunity for people.
Oh yeah, I'm really looking forward to it. So the challenge is gonna be basically, I'm gonna take people through the life cycle of a business from the inception all the way through filing your tax returns.
Mm-hmm.
As it pertains to a solopreneur, we're talking about people that are very small businesses or people that are thinking about starting a business. That's who we're targeting here.
Mm-hmm.
Now, just because of the time of the year, I'm going to be talking a lot about taxes before the challenge.
Right.
But part of the challenge is I'm calling it the Bedrock Business Building Challenge. Okay, it's about building a business. And part of that is structuring your business for the greatest tax benefit with the least amount of risk. Okay, unfortunately now you gotta pay attention to, I call them potholes, roadblocks, and government obstacles. They're all over the place now. Okay, and you gotta structure your business so that you can navigate through that. And that's what the challenge is going to be about. How do we navigate through all of that minutia and still run our business profitably? So I'm really looking forward to it, Haley.
Yeah, that's pretty cool. Yeah. Love it. Yeah. And I think that it's going to be amazing. So she said, Diana Anderson says, so not for the network marketer. I don't know that that's quite true, is it?
What do you mean?
Diana Anderson is saying that this challenge is not for a network marketer.
Oh, absolutely it is. Absolutely. Let me tell you why. I've been in network marketing. I have clients that are in network marketing. And what network marketing companies are great because they give you all the tools and the resources for you to market their products. Okay, you're not marketing your product, you're marketing their product. But that's fine because there's a revenue incentive. You can make a lot of money in network marketing. But what they don't give you is the business structure. They don't tell you how you should be an S Corp. You should be structured. They might give you some, oh, this is how some of us do it, but most network marketers become LLCs. And it's for the wrong reasons. A network marketer is a solopreneur that just has a big company behind them. Okay, I hope that answers your question, but network, I have plenty of clients and I made them all S Corps. And I have testimonials from them on my website, so.
Yeah, there you go. And Beth says, Diane Anderson, are you familiar with Courtney Epps?
No.
Yeah. So absolutely, this is for network marketers as well. So how do you define small business?
Okay, so I define it, you're asking me how I define it, right?
How do you define small business?
So us, people that are basically solopreneurs, even there's a big difference between somebody that is a solopreneur, and you could be an S Corp and a solopreneur. What a solopreneur means is that you don't have, 3 or 4 employees. Okay, we are on our own, basically.
Mm-hmm.
And that's it. A solopreneur's business is much different than even somebody with 3 employees, believe it or not.
Oh, absolutely.
It's a whole different ballgame.
Mm-hmm.
Once you start getting employees, you got a whole nother level of compliance that you got to deal with.
Mm-hmm.
Okay, so what the government said, the SBA, and this, that's why I thought it was a loaded question, but the SBA says a small business is up to 500 employees.
Mm-hmm.
That's insane. That not even close. We're in not even 2 different pages, 2 different universes.
Right. I mean, the difference between somebody with 5 employees versus somebody with 10 employees is tremendous. Beth, he's trying to answer right now. Is it defined by income or number of employees? $1 million earner? $1 million earner could be a single employee. That could very well be a small business.
Listen, I have a friend who makes $30 million a year, and he is a solopreneur. He has no employees. He's under the radar. Okay.
Yeah. And I mean, that's still a small business, and it's not just dollar amounts, because you can have somebody who, makes 5 million a year, but has 30 employees, or 40 employees, it just depends on the business. But I would say small business in this case is really defined more in terms of number of employees than sheer dollar revenues.
Yeah. I mean, the truth is not many people can make $30 million and not have a whole building of people working for them.
Right.
But mainly it's got to go by the, if you go on the SBA website, and this is what shocked me, they call them non-employer firms.
Mm-hmm.
They don't call them sole proprietors. Now that terminology threw me off, because in my world, everybody's a corporation. You work at any CPA firm, they don't have sole proprietors, there's very few of them. All of their clients are corporations. Okay, so about a year ago, I started doing some research. I'm sorry about that, I thought I'd come on. I started doing some research to find out that non-employer, I thought they were corporations with only themselves as employees.
Mm-hmm.
No, a non-employer firm means they're sole proprietors, and there's 25 million of them.
Mm-hmm.
And so I believe that the government's playing a little bit of, a shell game and some twisting of the facts, because the numbers just don't add up.
Absolutely.
Okay, the SBA says that 50% of businesses fail in the first 5 years. Okay. Now I know that we get 3 million new businesses every year, and we lose 3 million every year. So it's pretty steady. It's not like we're going, but if only 50% fail every 5 years, our numbers would be climbing through the roof.
Mm-hmm.
How is that? The numbers don't add up. So, it just doesn't, I believe that there's like smoke and mirrors going on out there. There's not a getting people not to be a corporation, but they make it seem that
Mm-hmm.
being a sole proprietor is okay.
Right. And it's really,
It's the easiest way to do business.
right.
It's also the easiest way to get into trouble when you're in business.
Right.
It makes no sense, Haley. And I felt like I had my head in the sand for 34 years. I said, this can't be. There's something wrong with this. And the truth is, I dug a little deeper and I found out the reason why is that it's too damn confusing.
Right. No, I get it.
The system is too confusing, and somebody's confused, they don't make a decision.
No, I get it. Totally get it. And when people are confused, if you give them too many choices, they will just not make any decision.
It creates anxiety and fear, and they put it off, and they wind up doing their own return, and then they go to an accountant or an attorney when they start getting tax notices. I've seen it happen all the time. It's happened my whole career. I just never put the pieces together.
Yeah.
All the people that came to me that were being audited, I just, you know what I'm saying? It's like it just clicked once I realized that they were all sole proprietors.
Right. No. Totally makes sense. So we are about out of time. Y'all, if you have not signed up for the 5-day challenge, please sign up. Please share it with your friends, post it on your Facebook page, bonus points for bringing friends into the challenge. I think that this is going to help a lot of small business owners with their financial aspect of their business. Thank you, Joe.
Thank you, Haley. Anytime. I appreciate it.
Thank you. We'll see you guys later. Joe and I will be here quite a bit for the next couple of weeks. So grab your free spots now. Thanks. Bye-bye.